Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw a gap lower and then just a steady grind higher in the markets. Really fascinating to see. However, when you really think about it, we're in July, it's summertime, where holiday is literally at the end of this week. So there's lighter volume. Institutions are likely stepping away, going on vacation, providing that neutral to upside bias float that we saw today through most stocks, but not all. And let's get into those details. But before we do, as a reminder, we've got non-farm payrolls being reported tomorrow morning at 8:30. So there could be some volatility at that time in the morning. All right, so let's jump into the market summary. You see here on this page, we've got the Dow Jones down 0.12%, NASDAQ down 0.82%, S&P 500 down 0.46%. U.S. oil is up 2.57%, nicely trying to break that bear flag pattern. Gold is pushing up 0.5%, and Bitcoin is starting to rocket higher, busting through some resistance. We'll take a look at that chart in just a few moments. In here, we've got the S&P 500 heat map. We see here NVIDIA, Apple, AVGO, Oracle all pushing up nicely. Oracle really had a even further push this afternoon. Nice move on that chart today. Netflix and Meta are falling down on the charts ever so slightly. We'll look at Meta just a little bit as well. Amazon basically flat, but then we have a mixed bag all throughout the rest. Utilities are really getting hit. Tesla pushed up very nicely today too. We'll look at that chart here in a few moments. Into the SPX. So here we are again, folks, pushing up on the charts, ever so close to this resistance area at the bottom end of this parallel channel, roughly about 6,345 points. That's the target area I'm looking at for a very decent pullback on the markets. You see here, we're very extended. I almost sound like a broken record. We're extended on the charts. We need some sort of pullback. Price just continues to defy gravity and float up higher on the chart. Should we get a pullback, first area of contention, which will be a minor speed bump, is the previous highs over here at 61.47 on the SPX. But major support where I likely see price going is going to be under 6,000, right around 59.78. Right there, we will have some very good support. Into the Qs. The Qs here are pushing up higher, recovering everything they lost yesterday. So this is very interesting and a nice change in dynamics here on the chart, because yesterday's price action looks like we were starting to curl over on the Qs, but the Qs said not so fast. I'm pushing back up on the charts, which then implies that we could hit this area of resistance on the Qs right at 557.84. That area should be very strong resistance. And one of the things I'm thinking, folks, about this all, we're going, as I said, we're going into the summertime, and then we're also getting into lighter volume, but we're going into the holiday weekend, most importantly. The markets, institutions do not want to see the market start collapsing going into a holiday. And the reason is they're going to get together with other people and tell them that their stock portfolios are doing well. If we're up near all-time highs, hey, this is awesome. Jump on board, start buying stocks. We're going to start ripping to a new bull market rally. And then after the holiday, things could change, and those institutions could use those collective new buyers when everybody got together as exit liquidity. We'll see if that happens next week. But keep in mind, too, one thing that is fighting against that, even though that could be the scenario, we likely will have lighter volume, which does equal neutral to slightly positive bias on the charts. All right, so next into the Qs, we see here the areas of resistance and the support down here at 516.53. Next up, SMH. This chart is clearly displaying, time is ticking. We are running right into this wedge area on the charts. In addition, look here, we're right near double top on the charts. What I envision happening is much like what's going on the Meta chart. You can see here, we poked right above, made new all-time highs, then got a rejection slam right back down on the charts. I envision something very similar happening with the SMH. We'll see if that happens. The bottom end of this parallel is roughly 284.84 cents. Should this area pierce and then come down and break, the first area of support is going to be right down here around 265, this collection of consolidation right here on the SMH. Next up, IWM continues to push. This is the area of the markets where I am more interested in going long. Notice We're way off the highs. That does leave a lot of room for small cap stocks to really start pushing. And we're starting to see this displayed in a lot of small caps as of right now. Meta chart, as you saw, was coming down. But then we also have some other small caps like Bull ripping higher, DNUT ripping higher, Plug starting to push higher. A lot of these small cap stocks that have really been beaten down low on the charts are really catching interest from investors. And that's called a rotation of capital. We're rotating out of the major players like the Tesla, the Metas, the Microsofts, and starting to put money into these stocks that are so beaten up on the charts, they have the potential to run 20, 30, 40, even 100% still, much like what most of the market did when it bottomed out at the beginning of April. Next up, we've got Bitcoin. And Bitcoin, you see here on the charts, is pushing through this declining trend line area right here, this yellow declining trend line. Very strong move for Bitcoin today. Not only is it breaking through this trend line in one go, it also is breaking through this 50% area on the parallel, which we stalled out in over price action over the last few days. So nice move up. Notice how it caught support on this declining trend line and then ripped higher on the charts. Next area of resistance that I'm watching is 115,926.55, followed by $118,717 at the top end of this parallel channel. First thing first, though, we're going to need to have a confirming move back above this 50% area of the parallel. If we do that, odds then increase for us to start pushing up higher to 115,000, 118,000. Watch tomorrow's price action in the close at 8 o'clock Eastern to see if we confirm above this 50% area of that parallel. Into gold. Gold had a nice update today, continuing its bounce from just about the top end of this parallel channel. We're getting right into resistance right here too with these pivots. Even yesterday's price started getting into a little minor resistance here. We'll have a little bit more minor resistance, just a little bit higher on the charts of gold at 33.67. We'll see if this 3-day bounce will stall out there tomorrow and then eventually pull back to this support trend line that's inclining right here at 32.42 on the charts. Next up, we've got silver. Look at this beautiful bullish consolidation occurring here on silver. Yesterday, I highlighted how on the weekly chart, we're putting in even cleaner bullish consolidation right here. Very nice chart pattern setup. Now, if this continues to play out, measured move is really not that far away. We're talking about $2.40 roughly just to get up there, tag that, and then also that's going to likely correspond with this longer term inclining trend line, which will then also be an added level of resistance right there, basically right at $39 to $39.50 should be an awful lot of resistance for silver. Support and buying opportunity would be $34.86 all the way down to this inclining trend line right around $32, all of which would still keep this inverse head and shoulders pattern valid on the charts. Next up, we've got U.S. oil. Now, U.S. oil, notice price action today pushed higher through this resistance area, but it looks like it's coming right back down into the close and settling out right here at $67.12. Great move for U.S. oil today, breaking out of this bear flag pattern. We'll see, but still, keep in mind, this still is all inside bar bearish consolidation. So this bearish consolidation still could play out to the downside. We need a solid move above this first resistance line to break the angle of trajectory of this bear flag to make it a little bit higher. If so, the next resistance is $70.33. But this is still bearish, even with this nice move today. Still bearish on oil. Probabilities do dictate further downside. As I mentioned, the support down here around $61.15. Next up, nat gas. Nat gas yesterday pierced this area of support, and now today is currently holding. We'll see if we start putting in more bearish consolidation on the chart, and if so, the next area of support is $3.13. We'll need a couple more days of consolidation to have that probability set in stone that we likely are starting to go down further on the chart on nat gas. If we start pushing up higher, first area of resistance will be $3.61. But as we know with nat gas can really get going and ripping higher and or lower. So this would be a minor speed bump. The next area of major resistance I would pay more close attention to is very close to $4, right at $3.95. The 10-year yield today did pop up as well as in yesterday, putting in a nice pivot low on the charts. All in all, 10-year yield still doing fine. Main thing, we're far away from this declining trend line where we were about to trigger an inverse head and shoulders pattern move, which would have taken the 10-year yield all the way up to 5.289%. Thank goodness that's not going that way, because right now we're hovering down here at 4.285, comfortable for the markets to continue pushing higher on the charts. Next up, I want to show Ethereum. Ethereum, nice move today, up 8.13%. And this chart really has so much information on it. If I just sit back and let you read it, you can see and almost dictate for yourself what price action is doing. Right here, Ethereum had a double upgrade to their portfolio. They were more efficient, they're quicker, and they're utilized more in their coin services. So the effectiveness of Ethereum is increasing, and really this has been long overdue. A lot of other altcoins have been stealing the spotlight away from Ethereum, but with this new upgrade, you can see here investors are really excited about it, pushing price up into a bull flag pattern here on the chart of Ethereum. We have a measured move to watch for an inverse head and shoulders pattern designated by this trend line right here, declining on the charts. That is the neckline for Ethereum. Should we get price above this area and confirm, a measured move is all the way up here at $4,100. So for me, I'm just buying any dips that come down on Ethereum. You see these displayed on the chart at 2103.91, followed by 1868.48, and then lastly down here at 1560, all of which are great accumulation areas for this potential move up and push higher to the measured move up here at 4101. Next up, CNC. CNC came out with news today that they did wipe out 2025 forecast, completely cleared it out, and it was mainly due to folks signing up for Medicaid applications. They said that they are actually lower than anticipated Medicaid applications, but the ones that have submitted are likely high-risk patients, meaning that they will require a lot of different treatments, unfortunately, which would also increase costs. So the healthy consumers of this insurance are not signing up. The ones that are unhealthy are, which is pushing the price lower. And plus, there's less folks and less participants in that field, pushing the price lower 40%. What a collapse. This stock hurt me on a live day trade today. We tried to take it, and it never really gave a good technical bounce. Unfortunately, in trading, that's sometimes how it goes. There's occasionally a loser, but the first one for me in about a month. So I'll get back at it and trade again in the very near future. Until then, let's look at this chart and figure out why this very long-term trend line, you can see this on the weekly chart. Look at this trend line from pivot, strung through to pivot, and price just pierced this area and is pushed lower, now at $33.78 on the chart. Mammoth wipeout in cost, taking price all the way back to 2017. Really kind of comprehend that. That was 8 years ago when price last touched this area. So this was a long time ago. Lots of profits lost all in this range. So the next area of support I'm watching is going to be down here at $32.45. But keep in mind, price can still go down lower with a lot of uncertainty going on with this new bill in Congress. We don't know how much is going to be kept into health insurance with Medicaid or how much is going to be cut. And so there's a lot of uncertainty. So investors weren't really lining up to push the price of the stock back up on this chart today. Unfortunately for that, but still there could be opportunities with price moving lower. As I said, next area of support, $32.45, but keep in mind price could go, if it continues selling, all the way down to $23.68. Truly incredible fall here on this chart of CNC. Next up, we've got FSLR. FSLR, you see, was pushing up much nicer today following these several days of continued upward movement. But notice it's running straight into resistance on this short-term inclining trend line. Today, it looks like we are closing just slightly above that trend line, which could be positive. But keep in mind, we're starting to get extended. Not quite all the way yet, but this sort of move from 135 up to 170, a nice 35-point move on the charts, is a little bit extended at the time. We'll see if we can make one last push up, tag this 189.64, start to consolidate before we then attack the $200 mark, and then ultimately at the 206.89. Any sort of pullbacks here on FSLR, since it did confirm a breakout, would be a buying opportunity, especially on this trend line, which is currently at 147.02. Next up, MBLY. MBLY is involved with automated driving. It produces technology that allows cars to drive on their own, that can recognize hazards, keep cars in lanes, make sure that they don't get into wrecks and don't speed, etc. So this technology is really on the breaking edge. Tesla's about to roll out their automated driving system in the very near future. But most importantly, what we do here in technical analysis, I've isolated down here an inverse head and shoulders pattern with the neckline of that pattern sitting here at $16.53. The measured move for this inverse head and shoulders pattern is up here at $23.49, implying we've got a chance for another 23 to 25% upside move in the near to midterm. Any pullback, since we have confirmed this breakout, would be a buying opportunity right down here near $17 to $16.50. Very nice move on MBLY, and it looks like it's going to continue moving in the near to midterm upwards. Next up, we've got Tesla. Now, Tesla, this is really interesting, folks. Now, this week and also last week, we've been talking a lot about our educational courses. They're all on sale, by the way. Check them out, 50% off any one of the educational courses. Do yourself a favor, start picking out these levels on your own and isolating them on all of your favorite stocks. In here, what we see with Tesla right here is a sleeper hold play. I'm not going to go into too many details. We've had a lot of people take this course and are starting to call out trades that I haven't seen or that they have seen on their own, which is fantastic. It's really awesome. They're starting to isolate these levels. But what we have here, this nice move down straight into the support trend line and a nice 5% bounce up today on Tesla. This all could have been captured had you taken that course and understood what to find, what to isolate for a quick 5% one-day move on this chart of Tesla. Next up, we've got Meta. Now, we did touch on this a little bit ago, how Meta pushed higher and it got into the inclining parallel channel. It did make briefly brand new all-time highs over here, but then since has corrected itself and come back in. So we've been looking at other stocks. We've been looking at MBLY and FSLR. Some of these other stocks are starting to break out. DNUT and Plug, what I mentioned before, they're starting to break out, but these big high flyers are starting to come back in. That's telling me there's a rotation of capital going on here. There's likely institutions very pleased with this massive move up. They're going to go ahead and start taking profits. Meta, one of which moved 55% that we see here on the charts. So they're happy to go ahead, take their profits, and then move on to the next play, which is likely putting that capital in lower valued stocks, on those small cap stocks that are beaten down on their charts. So once they do start moving, a quick 30% gain is very attainable. Next up, we've got Hood. Here's one high flyer that has yet to see some folks exiting. And if you look back here on the chart, I've got a number of trend lines here. We're showing that price is really struggling to get through and push higher on the charts. Needless to say, it's very extended. A nice 200% move from the bottom here in April. Incredible on Hood. One thing I'm watching, though, in the near future, are we going to confirm tomorrow? We have yet to confirm above these trend lines. Watch for price action's closing point tomorrow. If we close above this candle, that could imply that this trend line, the very top one right at 95.21, would be support. But this sort of extended move likely is going to come back in at very minimal to this inclining trend line you see here on the chart. And I know it kind of looks like Star Wars, but if you look, you see a pivot low here and a pivot right here, but we have not yet tagged it again. So the third hit typically produces a good bounce on the charts. We'll see if Robinhood comes back in over the next few days, having now pierced the $100 mark. If we come back down into roughly $85 right on this trend line, that could be a buying opportunity for another attack at the $100 area. Finally up, we've got Coinbase. Now, Coinbase today, notice that also with some longer term trend lines, this is a great way to understand the flow of price on charts. I took this, isolated this one pivot, and I drew 3 trend lines, but the ones I want you to focus on are the top 2. You see this one right here that's declining here. It connected over to a pivot on December 6th of 2024. And then this last one strung straight across, highlighting this pivot point as a high that needed to be broken. All right, so we zoom back over to current price action. When we did pierce this horizontal trend line, price got rejected, came back in, even gapped lower yesterday, but where is it finishing today? Right above that second trend line right here that you see price action moving right above. These trend lines help give you those resistance areas up here, the support areas, at least for the near term. But Coinbase has made a monumental move up. We'll see if it consolidates more, because more consolidation will be needed before it can break above this previous pivot high and maintain that move. And notice we've got more resistance right here on the chart inclining. So Coinbase, even if it breaks above this area at 368.90 it's really not going to have a lot of room to run before it runs out of steam and has to pull back and consolidate. So this move has been fantastic, but we need an awful lot of consolidating. The more consolidating will allow price to start attacking $400 over here more later in the year, like October and November. All right, guys, that's a lot of info for this holiday week. That should be a slower week, but I wanted to give you guys some great details on charts so that you can take advantage of them over the next few trading days. Again, non-farm payrolls tomorrow, 8:30. Tomorrow we'll have trading the close a little bit early because the markets are only open till 1 o'clock tomorrow afternoon, and then it's holiday time. So I'll see you tomorrow. Besides that, have a great rest of the day.